Hello and welcome to another video update on the SPX chart. In this video, I want to specifically focus on the 4-hour time frame. It shows us the right level of detail, but also gives us a good idea of the context. So it's important to understand that we see a decent pullback now. It's probably the largest pullback we've seen in a while. The fear and greed index is very much showing extreme fear at the moment, and the market is currently trying to break below the October low at $6,550. So it looks as if we are really finally on our way into this support area. This is the first main support zone on the chart. It's between 5,220 and $6,034. This is the zone I'm watching. It is still a bit too early to confirm, but as I said, over the last few days, when tracking the micro patterns, I cannot make the directly bullish scenario for another upside extension the preferred interpretation for now, and I will talk about that more in the micro analysis. But here in this update, I just want to show you the larger time frame. So the overall downside pressure remains high. I am going to track the downside move as primary until I see a 5-wave move up and until I see a break above the intraday high, which formed here when the price retested this channel from below at $6,772. The next structural support levels are $6,338 and $6,210. Pressure seems downward. I treat this as a B-wave correction at the moment. This might change. Below 5,220, we're likely going to move into the 3,000 to 3,500 area, and that would be proper bear market. However, for now, it's still very early days, but the decline is starting to get quite sharp. It's important to understand that the decline will likely unfold as ABC structures. So an A wave down, B wave up, C wave down. I mean, that could be everything, but maybe this forms only the A wave, then we get another B and another C. This is obviously quite a large decline, could take us down lower 10, 15, maybe even 15%, easily within this scenario. Okay, we've already obviously from the high declined round about 6%. So nothing is carved in stone here. There will be bullish alternatives on the smaller time frames, but it's important to understand this does look quite quite a lot like this initial ABC structure to the downside, at least, that I'm tracking. And I would say if we break really now more decisively below the October low, it will likely lead to a test of the $6,350 area, roughly in that area. Yeah. But basically my main motivation here is to show you the extent of the decline that could play out. Obviously, at every juncture, the market has a chance to turn around. I am going to continue to look for short-term bullish alternatives. There are alternatives I'm thinking about. There is a way for me to say that there could be another 4-5 pattern here, yeah. But then I would still need to see this ABC to the downside completed from there. Maybe I'm going to work on that over the coming days. But this gives you an idea of the next structural support levels and the main Fibonacci support area. Thanks so much. Bye-bye.